Hello, this is Jordan, and this video is being recorded on the late afternoon of Tuesday, February 18th, 2020. And in this quick video, I'm going to discuss the new correlation between the US dollar and gold. And starting off here, I have a chart of the US dollar and gold. This is a daily bar chart with 200-day moving averages. At the top, we have the US dollar. At the bottom, we have gold. And it appears to me that the typical, usual negative correlation between the two really changed just before the last Fed rate hike in December 2018. So it really changed there just before that in the fourth quarter of 2018. The dollar had already rallied somewhat. It pulled back a little bit at the end of summer. Gold had that big sell-off in the summer, but was bottoming and basing. So after that point, and once the Fed made that last hike, gold started to move, and the dollar, it kept climbing, although at a slower rate than gold. And what's really been interesting is the action since the beginning of the year, where the dollar looked like it was breaking down in a completely reverse course, and now it's broken out. As you can see here, new 52-week high. It's a new 2-year high. I think it's a 2.5-year high, or almost a 3-year high. And we see that that has not impacted gold negatively. And interestingly, if you look at the dollar and the last correction that it had, it made a double top, you could say, at the very end of the summer, just before October, and it corrected into the end of the year. And during that period, gold actually corrected. I mean, not through 100% of that period, but through most of that period, gold corrected, and we saw a bigger correction in silver and the gold stocks. So the correlation has clearly changed, and what I've been writing about is, if you step back for a second, the fundamental driver of gold is negative real interest rates or declining real interest rates. And so what's happening now is that a stronger dollar is, it's causing many things, but one thing it's causing is more money to come into the U.S. and also into U.S. bonds, which pushes interest rates lower. You have negative interest rates around the world, so you'd much rather own U.S. government bonds compared to those other government bonds. And then if you factor in a strengthening currency on top of it, that gives you a really strong argument to put your money in U.S. government bonds rather than government bonds outside of the U.S. So that's pushing down interest rates, and the Fed follows the market, and so in other words, a stronger dollar is leading to, or is going to lead to, easier Fed policy. It's going to lead to a resumption of the rate cuts. If the stronger dollar continues to be strong. And in addition to that, just another note, I saw today, there's a 50% chance now of a rate cut in June. So, a couple weeks ago, people were talking about maybe the next cut will be in July. Now there's a 50-50 chance in June. And if this coronavirus really worsens significantly, in the next couple months, maybe that cut will be in June instead of July. So, long story short, stronger dollar is going to lead to rate cuts, a resumption of the rate cuts, and that's obviously bullish for precious metals. It's going to lead to lower real interest rates. And in this chart here, I'm looking at gold at the top and gold against foreign currencies at the bottom. Another way to look at gold against foreign currencies is gold multiplied by the US dollar index. Originally, I measured it as gold divided by the US dollar index basket. So gold divided by a basket that was 65% euro, 15% yen, Canadian dollar, British pound, et cetera, et cetera. But that's actually equal to just gold multiplied by the US dollar index. So that's an easier way to look at it. And so again, that's charted at the bottom. This is a weekly line chart. And what we see here is that far more often than not, gold against foreign currencies tends to be a leading indicator for the gold price in dollars. I mean, look at what happened in those very brief bull moves for gold in the mid 80s and the mid 90s. They weren't confirmed by gold against foreign currencies. The higher highs in gold in the 80s and also in the mid 90s, not confirmed by gold against foreign currencies. However, and I drew 3 lines there after the bottom at the turn of the century and millennium. You look at very beginning of 2002, gold against foreign currencies had made higher highs. Gold had not yet. Same thing happened in the middle of 2005. The huge breakout move in gold stocks. It happened in later 2005, but it was kind of in the middle, a couple months before that, when gold against foreign currencies broke out. And I mean, it was like I'd have to look at it closely, but that was basically a multi-decade type of breakout there. Again, that happened before the gold price broke out in US dollars. And then during the financial crisis, we saw it again, gold against foreign currencies, and made another higher high there at the very beginning of 2009, well before gold in US dollars. I mean, gold in US dollars eventually broke out later in 2009. So the lag period there was, I'd have to look at it exactly, but it was maybe 7 or 8 months. And since the worst of the bear market in 2013, I mean, gold against foreign currencies that bottomed at the very end of 2013, and it was making higher lows, and gold obviously went lower into its low at the beginning of 2016, or the very end of 2015. And recently, what we've seen is gold against foreign currencies in recent months. It made a new all-time high. And the pullback that it had was just retesting that. You can see that line there in red. It was just retesting that former resistance, now support there around 1400 or so. And I mean, it's made a nice V bottom as gold, foreign currencies led by the euro, they're really weakening against the dollar. Gold's holding up really well. So gold against foreign currencies is a very, very bullish chart. And again, if we look at the fact that tends to lead gold in dollars, that implies that sooner rather than later, gold is probably going to make a new all-time high. I'm not smart enough to know, and I don't have a crystal ball, so I can't tell you if that's a year away, 15 months away, 6 months away, 9 months away. I don't really know, but all I know is that gold against foreign currencies, it tends to lead. So this is what we want to see. This is a really good sign. So this is a market that, at least as far as currencies, is doing well in real terms. And look, gold against the stock market, if we ever see a real breakout there, that's going to add a lot of fuel to the fire. And then that's what can get gold up to 1900 or even higher. So things are looking really good right now. It was a great day in precious metals. If you want to follow more of my work, go to thedailygold.com. You can opt in there for my free book. Also, you can check out my premium service at thedailygold.com/premium. We focus on market timing and stock selection, looking to get into the best juniors, looking for juniors that can go up 3x to 5x over the next 12 to 18 months. Thank you for listening to this video, and I hope you enjoyed it, and I look forward to publishing another update for you guys in the days and weeks ahead.